Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York on Thursday, the 12th day of February, 2015, and this is the daily report for gold and silver. Interesting day developing in the market. We do have the equities markets making a stab for those record highs. Dow near 18,000, S&P above 2080, currently trading 2083. We'll look at those charts throughout the show. Gold showing some support here, currently trading up about $4 to $5 on the day. 1222, 1223, the low 1215, or excuse me, 1219.17, and the high 1231.30. Silver also trading higher on the day, but up only a nickel on the day. Current print 1685. In terms of the highs and lows, we see 1702, that would be the high side, 1666 on the low. More on silver at the end of the show. Traders, the real question on many gold traders' minds is whether or not this 61 or 50% retracement area will provide support. Today's basic topic is going to be our upcoming strategy and exactly what we're looking for in terms of criteria. Of course, we have implemented a total of 3 trades this year. The first trade, we pulled out a tremendous amount of profits. And the last 2 trades have been drawdowns. I want to be very, very careful, of course, about the 4th trade that we're putting on this year. I'm still looking in terms of our strategy to enter the market from the long side. I still think that after this long corrective wave, if in any way we are in any kind of a bull pattern, this particular level of support should in fact hold and is pretty critical. We're looking at a daily chart, and on this daily chart I've got basically 2 different fib retracements. One starting at 1165, moving up to this top, call it 1306, 1307. One starting from approximately 1130, moving all the way up. Traders who have been with me for a while know that what we look for is what I've labeled Fibonacci harmonics. And simply put, it is where you get 2 different time cycles, meaning price points, because price points and time cycles are going to work together, that come and conclude with very, very similar information. Now, we've got a fractal scenario going on in the marketplace, because you'll notice that not only do we get our harmonics here, but we also get our harmonics here at a 38% retracement. And then our final retracement that we would look for is this 61%. And I have not put in the 76 on this side. Let's go ahead and do that. There, I've now added that. But what you can see is on this particular chart, because of the way it moved up and came down precisely 61%, everything seems to line up. So you've got 61.76, you've got 61.50, and then 38.50. They all really line up pretty eloquently. You're getting a harmonics across the board. That, to me, tells me that these numbers, these different fib numbers and points, are pretty darn important mathematically and should provide us with some real insight into the marketplace itself. Now, as you are well aware of, we've taken a couple of stabs at this market. The first stab we took was when we thought that 38% might in fact be the bottom. That was not to be. You can see it slips through. And then also here at about 1235 to 1239, it slipped through the 50% and went through that like a hot knife through butter. So the question is whether or not this particular area right in here is going to hold. And as I told you, I'm going to have some more caution in entering this next trade. And what I mean by caution is I'm not going to try to get in until we get a confirming candle to the candlestick pattern that we're looking at, which brings me to our current daily market scenario and the candlestick that's pretty easy to identify. And the candlestick I'm looking at is this particular one right here. And this candle is part of the umbrella group of candles, in which at the bottom of a market you can either get a hammer or inverted hammer. That's what we're looking at here, is an inverted hammer. At the top of a market, this same candlestick type would be called a shooting star. The reciprocal would be simply called a hanging man. So the umbrella group of candles are single candle types, and why they are so important is because it's the relationship between the tail and the body size. Body size must be really small relative to all the other candles. The tail has to be 3 times the size of the body size. And interestingly enough, this is one of the few patterns where candle color, meaning whether it's green or red, are really not important in identifying this candle type. This could be a red candle, or it could be a green candle and still have the same significance. Now, the fact that the market came up, tested this high, came back down, we're close to these lows, but we are well above this, call it 18, 19 area, tells me that this is the area we do want to look at as a potential level of support. Now, to actually take this particular call, what you're looking for is a confirming candle on the next day. I'm going to try and put that in as best I can, but what you actually would look for is on the following day, what you want to see is a green candle. This is where color is important, with a higher high and a higher low. It would look something like this. So the pattern itself would be this inverted hammer after a defined downtrend. That's the criteria for the inverted hammer to be identified after defined downtrend. It also matches up quite eloquently to support. So traders, what I am just trying to say is that if we get this confirming candle throughout the activity tomorrow, we will issue a buy recommendation in gold. If we don't have this follow through, we will sit on the sideline. Obviously, the action today has been in the U.S. equities markets. We're looking at the Standard & Poor's. This is a Japanese average chart, half-a-day average chart. We had a record top that would certainly looks as though we're coming close to at this point. 2090 is that record top. When we look at this chart, we can clearly see this defined top right in here. And we can see that we're not all that far off of it. We are at 84.50, so we're roughly 5 to 6 points off of that record top. But you can also see that that high that it has had kind of matches up pretty eloquently to the record top. So it looks like we've tested it. Easiest way to see is to actually go ahead and remove this study and look at a straight candlestick chart. And it becomes very, very apparent that this market is genuinely points from the record top. Traders, looking at the crude oil chart, it's been most interesting. Now, on a weekly chart, we're already at Thursday. We are down on the week. Look at the range here, but we are up on the day. We can see that when we convert that to our daily chart, and there's this green candle. So it does seem, at least on a tentative basis, I believe that this could erode pretty quickly, but at roughly 822, 76% retracement. That's where we are pegging our current support in the crude oil market. Now, traders, we're looking at our dollar chart. This, of course, is a weekly chart. There's absolutely no question we hit our first real level of resistance right here up at around 96, trading at 94.22 now, so it has come down substantially. But my question that I'm wondering is, you can see that as this market moved up, it had this major spurt. That was followed by a very, very short period of consolidation. So a couple of weeks of consolidation. And then from there, it continued on its upward path. Little bit of consolidation, but nothing like here. It then returns to its upward path, almost a linear line up. And again, we're getting this type of consolidation. So are we looking at a genuine top, as you can see here, and the market moves down, or here as the market moves down? Or are we looking at a resting area within the market, such as here or here, in which, although the market is in a defined uptrend, it's simply a small period of consolidation until it returns to that overall direction of moving higher? That's something we will have to see in terms of how the market unfolds. So traders, as far as silver goes, we do have it up nominally on the day and also nominally on the week. We are looking at a weekly chart. You can see the place, the area that it opened at on Monday, our current print on it is 1685. We're really mid-range in terms of this last rally that came up. Obviously, I'm still looking at resistance at around 1710, support at around 1620 in between these two bands, and I do believe that it will continue to trade in tandem with gold. So we want to see if we get that confirming candle tomorrow on our daily candlesticks. We are at a good Fibonacci area to find support. Now we want to see a pivot or reversal pattern in the candlesticks, and that would guide us in terms of our strategy and our next trade. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow on Friday for the weekly wrap-up.